I'm Corbett Wall with DB Auction, here with your feeder flash for Monday, June the 22nd, brought to you in part by Joplin Regional Stockyards. They're going to sleep in a little bit here on this Monday morning, not starting until 7 o'clock in the morning, with 4,500 head on offer for the regular Monday sale, but going to be having a lot of cattle marketed through there in the next couple of weeks. This Thursday, the 25th, they've got a weanback special, and they're expecting over 6,000 head for that weanback value-added sale. And then don't forget, next week they've got the big primetime livestock video, the Big Bang sale, and that'll be next Thursday, July the 2nd. So don't miss those sales. You can see all of them on dbauction.com. Go to joplinstockyards.com, or for that primetime livestock video, go to the primetime livestock video website. No news as far as the DOJ investigation. We are getting some pretty confident word that they are in there doing some investigation. We never got any word that what's left of the P&S Packers and Stockyards Administration was doing any investigating. Of course, it's hard to tell when they're doing investigating. That they show up after the smoke's cleared, and you know, you can call them on a hot check rider, and they'll just tell you, well, he doesn't have a registered bond with us, so we really can't do anything about that. So then the guys ask them, well, what do you guys do? And they say, well, we mostly harass people with bonds. But so there's no news coming out. The DOJ is doing something though, guys. And you can rest easy with that, but we're not going to get any news until it's all over. They're not going to give us continual updates through here. You know, I mentioned on our last visit for Friday that some of our most distinguished leaders within the industry are starting to get worried that the DOJ has concentrated their focus on the antitrust violations too closely, and putting all their eggs in one basket. And if we don't get that proven, which antitrust violations are very hard to prove, we may not get anything. And we would like to have a little bit more levity, a little more transparency in what they are investigating. And we wish that maybe we could get the Trump administration, you know, the Secretary of Agriculture, Perdue, to come in and tell them to specifically look at the P&S Act violations that they also broke. Your big four packers, who I'm talking about there. But we don't know what's going to happen there, and like I said, until likely it's all over, or if somebody's got enough pull to get that investigation widened back out. We're probably not going to hear anything until it's all over, and you know, chances are we may miss the boat. But as hard as what we hear that DOJ is investigating, it, they would have to find something, you would think. Packers are now kind of letting loose the charity bids. They're kind of getting back to regular business. We've got our slaughter back up to pretty much normal right now, and our markets are starting to find a little bit of fundamentals here, but we've got to kind of move on through this pandemic. But let's try to get something done within the industry before our irons go out. That's something we really need to do. We've got to get something passed, whether it be your 50-14, if we negotiate it down to 30-14. We need to get a mandate on a minimum negotiated cash trade. We've got to get some of these things done. We've got to do something, and it doesn't seem like anybody really wants to do anything. You've got to be bold. You've got to try new things. We've got to try to use the leverage that we have right now while we've got it, and try to make some changes that will last if we want to have a future for this business. I know probably most everybody that's watching this video was up Sunday night to watch the first episode of Yellowstone, the modern day Western there. And if you guys were watching, I hope you paid attention that the one part where the cow hand was watching them gather up the pears and said, well, what are we going to do? Who's going to feed the world whenever all of us are gone? And then the main character, Kevin Costner, says the world will just starve. because and I'm glad that somebody is seeing that, even on a mainstream television show like that. If we don't start doing some things to change the industry in a way where people can, and this whole deal, I don't want you guys to get confused. This is not for the cattle feeder. This is for the backgrounder and the cow-calf man. All this we're talking about, because your cattle feeder, you know, they're using risk management. They'll buy cattle they can hedge. They'll get in some kind of a sweetheart deal or a formula, and then they'll be able to get by. The problem is they keep jumping at the basis, and they just keep giving less and less and less. And we're going to get to the point where nobody can afford to raise cattle anymore. You know, I've told you guys several times, you know, you can't buy a ranch and pay for it by running cattle. You've got to have it give to you. You've got to have a lot of equity in that thing when you take it over. You've got to have oil and gas on it. You got to have hunting on it. You have to have something to be able to make ends meet. And there's fewer and fewer and fewer people that want to fight that anymore. And so what are we going to do? I guess we'll just have your big corporates come in and run all the cows too. Is that what you guys want? But we've got to be able to let these cow-calf producers live. We've got to make it where it's affordable. They need real money. They can't just have a paper trade. They have to have a real market for those calves. A price per pound, a price per head, so that they can buy their inputs and make their land payments and things like that. But let's go ahead and talk about some things. I talked about all last week. I was surprised how well the feeder cattle market was staying up, while our cash fat cattle market just continues to drop. You know, we've lost $20 a hundred on live fat cattle here in the last 2 to 3 weeks. And we know those were kind of charity bids, but still, that's what people were getting for some cattle. And so our feeder cattle have just been selling really well. They sold well all last week, and I've been trying to encourage you guys to take advantage of this. Contract your cattle if you can. You know, put them on one of these videos. They've got several big videos. They had a tall grass special Superior did late last week. Joplin's got one coming up. Western's got one coming up. Northern's got one coming up. Superior will be having more of them. They're big ones that they have out in Colorado. But you guys need to get them put on there, and not just to appraise them, but to get them sold. You need to hedge those cattle if you can. There's a lot further to fall than there is to gain, guys. And the fundamentals just don't bode well for holding these. And you may not be happy with what you're getting for the cattle, but they're pretty handsome price levels. The tall grass special they had on Thursday, Superior did, is showing that $1.30 on an 8.5 slide steer coming out of the Flint Hills. That's still kind of the mark. Anything better than that, you've really sold them well. Anything less than that, guys are going to be kind of disappointed in. But you need to be thinking about that, laying off some risk. We don't really see a whole lot of opportunities to gain a lot more ground in this fat cattle. You look at the cattle on feed report that came out on Friday, it was kind of disappointing at all 3 levels as far as the numbers that come out. But things have been so skewed during this pandemic, and the gouging and the changes in the way we've marketed cattle, and the changes in the way that we've marketed beef, and everything's just been so strange the last several months here, that we've still got to give it to these analysts, because the average of the analysts' guess we're still pretty darn close, and I think close enough to keep this cattle on feed report from really doing damage itself. But there's plenty of other news out there that could sure slip the market up in a big hurry. But you look at the June 1st inventories, your average guess from your analyst was 99% of a year ago. It come out at 99.6, but if you compare the numbers, one rounds to 100 and the other one's 99, but that's pretty close. I wouldn't think that'd be too bearish. Your placements in May, those are the ones that are really hard to hit. The average guess was 97.5, but it come out to be actually 98.7. So not horrible miss there, but pretty close. And you think, well, that's not too bad. No, but your marketings is what was tough. because you remember during May we were still having a hard time getting the product in there to get it sold, and we weren't being able to get those cattle harvested as fast as we'd like. So that, yes, affects your marketings. But they had them guessed pretty close. The average guess was 73.8. The actual come in at 72.5. But all of those on the unfriendly side. And as top heavy as our board is right now, it may be enough to push it off the edge here. Some of the other information that was in that report is pretty bearish on the fundamentals too. But your cattle on feed over 150 days, nearly 1 million head more than the same time a year ago. And we've been saying that we thought we had about 1 million head of cattle backed up, but actually if you look deeper, that may not be as bearish of a quote there, because we thought we were going to have, you know, hundreds of thousands more cattle on feed and market ready coming in before we even had the COVID-19. We thought we were going to be heavy on supplies. We've been talking about that. So you kind of take those into account. You could back that nearly 1 million head off, you know, maybe 200,000 or 300,000 there. So our carryover is still big. By far, it's the most in the South. And you hear some guys saying, well, we're fairly current in the North. Yeah, some Iowa, some Nebraska lots, there'll be a lot of them that are kind of current. They're really not in that much different shape than they were a year ago. Most all of our big carryover is in the South. Most of our backed up sales of our cattle that are getting heavy is mostly in the South, and it's mostly in your corporate yards that typically sell everything formula. But the placements were especially big in Kansas. And so that didn't help anything either. But we can probably rest assured that we're going to have to get this kill back up and exceed a year ago levels. And I'm not sure if we can get out of it this year or not. Maybe it's not as bad as the worst we feared, but it's sure not as good as some people have painted it to be. We've still got a lot of cattle to carry over. It's still going to be really hot this summer. We've got a drought down here in the Texas Panhandle, over in New Mexico, southern Colorado. That's not good. There's a lot of reasons that it may not be too good here. And I've been saying it, and you guys say, well, you must be short the board. Maybe I am. I don't know. But I don't know day to day. But I just trying to tell you guys, you want to protect yourself. You want to protect yourself. Guys that I highly respect that had their own cattle turned out on grass this summer have already sold them. And that's one thing I can tell you guys. And there's just not a lot of room to go up, and there's a whole lot of room down. But let's look at your board for last week. Live cattle futures. Monday was unchanged. Tuesday was up a quarter. Wednesday up 17 cents. Thursday down 42 cents. Friday down $1.37. Your live cattle futures for June 94.70, down 137 for the week. August ended the week 95.40, actually up 8 cents. So now we've got August back on the right side of June. But you know, June has hit the point where we can't attract any more long positions because they're afraid they're going to get delivered upon. And there has been a few deliveries tendered, and that kind of keeps it backed off. But you know, we're looking at a $5-6 basis there. And it's getting deep in June. August feeder cattle. Monday was up 7 cents. Tuesday up $1.70. Wednesday up 70 cents. Thursday down 60 cents. Friday down 42 cents. Your August feeder cattle ended the week at 132.55, up 145. Like I said, it was pretty smoky all week, guys. September 133.87, up $1.40. Your fat cattle trade through Thursday, 95,000 head. So we'll find out Monday, and I'll tell you on our next visit what we ended up negotiated in your 5-area feeding region. But 95,000 through Thursday, that's pretty good. Not a lot of sales on Friday, just a little bit more cleanup trade there. But through Thursday, all of last week, up through Thursday, your live sales steers and heifers from 98 to 105, really heavily 98 to 102, with a weighted average there around 101, and that's not going to change a whole lot. On your spread though, that was weak to $3 lower. Your dress sales, steers and heifers, 157 to 167, 3 to 5 bucks lower. But you know, it was rarely over 165, and that was just early in the week. And then 162.3 sure stopped them later in the week, and mostly 160 there. But your weighted average on dress steers last week through Thursday was 160.75. And that's more than $5 lower. Even though the spread was 3 to 5 lower, your weighted average was more than $5 lower. So pretty stiff losses. A little bit of trade there. Friday, Iowa had a few hundred there at $1 live and 163 dressed. Nebraska had a couple of loads at 160 dressed. Kansas had a few hundred, about 600, 98 live. And then that's where predominantly you were in the Southern Plains. Live was 98 to $1, but a lot of 98 also. So we're sure below $1 now. If we're going to say our benchmark is the Southern Plains live, we're going to be below $1, and so we'll delve off further down into the 90s as we go forward here, and that is not encouraging for your markets, cash cattle or feeder cattle. But 600 head there, 98 live in Kansas, 161 to 162 dressed. Texas just had a piece of a load. Dairy cross steers at 138 dressed. But let's talk about your box beef cutout values. We know that they've been dropping really, really sharply. It didn't take them very long to get back very close to where they were before we started seeing the effects of this pandemic, and we're just about there. But your weighted average on all of last week's trades, choice cuts, 220.34, down $20.42. We've just about got them back where they were before we had all this stuff. Select cuts, your weighted average on last week was 208.72, down 15.49. But on Friday, your latest established market, Friday afternoon on choice cuts, was all the way down to 213.72, and we were just under 210 in early March whenever all this pandemic started. Selects on Friday were 203.91. But on your weighted average, bulk of the sales last week, just under a $12 spread, but a huge movement of current delivery box beef cutout values, box beef loads, volume, of 971 loads of cuts, grinds, and trimmings. That's big. Your slaughter ended up being a little more disappointing because of Father's Day. Several places didn't do much on Saturday, so we had a disappointing Saturday. So we'd been running ahead of last week, of the previous week, all week long, but ended up with 656,000, which is still a large kill, guys, but it was 2,000 less than the previous week, 12,000 less than the same week a year ago. Let's talk about your feeder cattle market. Your real-time index on DV auction ended the week at 128.82, and it's unbelievable. That is exactly what it ended the week, the previous week at. And you think, well, your cattle were selling pretty well. Yeah, they were selling pretty well, but they were kind of hinging right there around that 800 pounds, which is the basis for your index there. And in some sales, we saw the cattle that were under 800 pounds or the lighter weight feeder cattle selling lower, or that sometimes some sales they were selling higher. But early in the week, for the most part, our markets were a little bit easier, were a little bit lower. And then the last half of the week, they were some higher. And in the north, they kind of like the lighter cattle because they know they're going to have a lot of cheap corn. I tell you what, those guys growing that corn is like beating their head against the wall. The way things are set up, they're never going to let them have a market on this corn. And they're just working on very, very slim margins. One way to try to add value to that grain is to feed it. And the way most of those farmer feeders look at it, the more of it that their cattle can put away, the better. So those lighter weight 7 and lighter 8 weight steers and heifers were selling better in the north. In the south, it was the heavier cattle, the cattle weighing 900 and above, were selling the best. And that's how come you saw your index levels just about steady, is because we just had kind of a up and down through there. And that's a 7-day moving average. So it took your early week weakness and your late week ups, you kind of all into consideration. They kind of all evened out in the wash. How about some individual quotes late in the week there? How about South Coffeyville Stockyard, South Coffeyville, Oklahoma? 106 steers weigh 788 at 136.85. And then Torrington, Wyoming on Friday, 66 head, 769 pound steers bring $142. And that's your feeder flash for Monday.